Hello, everybody, and welcome back to the second week of the Money Mindset channel. And today's big question for week two is how do people actually make money with crypto? And what is cryptocurrency? So, as you guys before, today's video is about cryptocurrency. You've probably seen stories about people getting rich with Bitcoin or other coins, but I think you're all wondering how does it really work? And before we cover all the money making strategies in this topic, let's quickly cover the basics. So first of all, what is crypto? Crypto is short for cryptocurrency, which is digital money. You can send it online, like saying an email, but it's not controlled by banks or governments. It runs all a thing called blockchain, which is a giant public record book that anyone can check, but no one can secretly change. The first and biggest cryptocurrency was Bitcoin, which I think you all know that grew very fast and was created back in 2009. Since then, thousands of other coins have been made called altcoins. Some of these projects are very serious, like Ethereum or Solana, while the other ones are just memes. People like crypto because it's fast, global, and open to everybody. But the prices are super volatile, which means that they can go up fast and or down really fast. Let's go to our next part, which talks about how people make money from crypto. First of all, the first money making method from this is buying and hodling. This is a classic approach. You can buy a coin like Bitcoin or Ethereum and hold on it to months or even years, waiting for the price to go up. If it does, you can sell it later for profit, which is similar to stocks. Sounds easy, right? But there's a catch. Crypto prices can drop as fast as they rise. So if you buy a lot at a wrong time, then you lose everything. The next method is trading. Instead of holding, some people trade. This means buying and selling more often, every week, every day, or every hour, to take advantage of the price swings. If you're good at this, then you can make a lot of money by reading charts or timing the market or even using AI to do some trading. But this is very risky. Most beginners lose more than they gain when they try to trade as the market moves so quickly. This is also similar to stocks, as both of these money making types have you invest, and both of these money making types have trading in them. On to the next money making method. Next money making method from cryptocurrency is staking. On certain blockchains like Ethereum or Solana, you can stake your coins. This means that you can lock them up to help secure the network. In return, you can earn rewards like interest on a savings account. It is safer compared to trading and selling and buying, and you can earn quite a bit from this. But you're also taking a risk. If the coin price drops, then while you're staking, then you can lose your money overall. This is a bit similar to dividends in stocks, but not quite the same. Number four, lending. You can lend your crypto to others through platforms and apps and earn interest back. It's kind of like being the bank. But if the platform gets hacked or the borrower doesn't pay him back, you could lose all your coins. So always use your trusted platforms. This is also a very complicated method, as this one doesn't really include the price of the coin dropping too much, but more concentrates on hackers and the borrowers scamming you, which is just a very um, trustworthy money making method. The next money making method is mining. Mining is how Bitcoin started. Computers compete to solve puzzles, and the winner gets rewarded with new coins. But mining is kind of tough today because it needs expensive machines, ton of electricities, and very strong computers. And the rewards are smaller over time. For most people, it's not really profitable. But there are some people who will take profit from it. As be careful, as if your computer is very laggy and doesn't load correctly, then your computer is probably mining Bitcoin for somebody else. Yeah, that happens too. Finally, the last one is the way that everybody loves. It's airdrops and rewards. Yeah, let's go. Sometimes new crypto projects hand out free tokens called airdrops to get people interested. It's like a casino. If the project succeeds, those free tokens will be worth a lot. But most of the time, they don't end up going well and being smaller value. Still, it's free, so it doesn't hurt to try this method. Important warning. Okay, so it's very important as none of these methods are guaranteed. Crypto is one of the riskiest investment types, even riskier than stocks. Prices can move up or go down in hours or in even seconds. And since it's a digital marketplace, platforms get hacked since there are many platforms here. And these trustworthy money making methods, like the lending one, fall under scam and rug pulls, which happen all the time. A rug pulls is when somebody makes a coin, makes a lot of money off of it, and then pulls it so it decreases in value, so he doesn't have to pay anybody the money. So if you get into crypto, only invest the money in places where you can afford to lose. Don't invest too much. Very careful with this. Okay. Okay, let's move on to the last part of our video, which is keywords that you need to know when investing into cryptocurrency. First of all, cryptocurrency is the digital money you can send online. Blockchain is the public record book that stores all the transactions. Bitcoin is the first and the biggest cryptocurrency. Altcoin is any coin that is not a Bitcoin, like Ethereum, Solana, or Dogecoin. Wallet is a digital bank for your coins. Public key is an account number. Private key is your password. If you lose it, your coins are gone forever, and you have no money. Yay. Token is a type of coin built on another network. Gas fee is a small fee you pay to make transactions on blockchains like Ethereum. Uh, D DEFI, short for decentralized finance, are apps that let you trade, borrow, and lend without banks. Whale is someone who owns a massive amount of a coin. And finally, our favorite, rug pull, is a scam where developers take investors' money and vanish. And that's it. Those are the main ways that people make money off of crypto and the keywords you need to understand before diving in. Crypto is exciting, but it's not guaranteed path to the rich world. Always do your research, and the research is like means watching this video. Please subscribe, like, so you can watch all of the videos for the next 5 weeks. But yes, be careful of scams and never trust anybody. Never invest more than you can lose. If you enjoyed this breakdown, hit the button, subscribe. Of course, that's what I said before. For good finance videos, for business videos, for 5 more weeks of good knowledge. And let me know in the comments, do you HODL trade or stay away from crypto? Thank you everybody for watching. Peace out. So now let's talk about the potential positives and negatives of crypto. First of all, the positives. Decentralized. So crypto is not controlled by banks or governments. Second of all, fast and global. You can send money anywhere in the world just in minutes. Open to anyone. No bank account is required, just your phone or your computer. Potential high returns. Like in stocks, some people make big profits when prices go up. Innovation. Cryptocurrency is a very good way of expressing new technology like DeFi or NFTs, and small contracts are charging finance. Negatives on crypto. Volatile. Prices can raise or crash in hours. Scams or hacks, rug pulls, fake project, hacked platforms, and fake lending are very common. No protection. If you lose your private key or get scammed, there's no customer support or no getting back your money or your coins. complex wallets, gas fees, and blockchains are very confusing for beginners without any research or analytics. And lastly, regulation risks. Government may ban or restrict crypto in the future due to potential risks of scam operations and other illegal things co- um, that are related to crypto. Crypto itself is not illegal. So let's move on to the second part of the video. And in this part of the video, I'll talk about my journey in investing into cryptocurrency. So I've been researching the crypto coins in the radius of $20 to $30. As as I said before, we were like investing about $50 to $70, about 70 for each money making method to see it to make it realistic for you guys, as not all people have too much money to make the money. And I came across two which are very promising. So today I'm gonna explain why in this second part of the video, and why I let them I decided to invest in. So before this, I want to just do a small disclaimer. I already made a disclaimer at the start of the video, but again, this is not financial advice. I'm not telling you to buy these coins. I'm just sharing my own research and my personal investing journey. Always do your own research. Make sure you put comfortable with the risks before putting your money into crypto. So first coin I want to talk about is Chainlink or Link. Right now it's sitting about $22. So why do I like Chainlink? Well, it's because it really solves a really important problem in the blockchain world. You see, blockchains and smart contracts are secure, but they can't directly connect to real world data. That's where Chainlink is good at, as it acts like a bridge between blockchains and outside information, things like price feeds, weather data, scores, sports scores, you name it. For example, let's say a decentralized insurance app wants to automatically pay all its money if there's a flood in a certain area. The blockchain itself doesn't know how the flood happens. Chainlink provides that verified real world data, so the contract can actually work. That's a big deal because something like Chainlink, a lot of these smart contracts like and DEFI applications just won't be possible. That's why I think Chainlink is very gonna be very solid in the future, and I think this is what the crypto world really needs. The second coin is Avalanche or AVAX. Right now it's a bit above $30, um, but it's still in the same range. So Avalanche is another project I really like because it's focused on stability and scalability. It's one of the biggest criticisms of Ethereum. So it's like similar. For example, that it gets so it's like basically everybody thinks that Ethereum is better, as gas fees can be crazy high in Avalanche. But Avalanche has been able to handle thousands of transactions per second with much lower fees. What I find especially interesting about Avalanche, that it is not just fast but also designed for flexibility. Developers can create their own blockchains called subnets that they're customizing for whatever project they're working on. This means a game developer could build a blockchain optimized for gaming, while a finance company could build one optimized for speed and security. And this opens the door for a lot of growth and option across multiple industries. So of course, there's a lot of risks with these coins. With Chainlink, the main is competition. There are other products that try and provide data to blockchains, and but none of them are not as big as Chainlink right now. With Avalanche, the challenge is attracting more users and developers because Ethereum still dominates the smart contract space. So it is definitely not guaranteed that these coins will skyrocket, but that's the case for pretty much all the crypto. So why I decided to invest in them right now? Because first of all, the price is very low right now, as 20 and 30, and second of all, the just the general idea of these two coins is very good, and I think they'll progress very well in the next months or a couple of years. So I don't expect like overnight gains for this. Maybe a small profit gains, but I think in the long term this might work. So I'll, even after my 5 week journey, I'll still post some videos on this to see how much Chainlink and Avalanche grow.